A very good evening. Namaskar to all our mentorship traders. Friday evening, 21st of May 2021, 9 p.m. Indian Standard Time, our usual Friday evening meet. We talk about the markets and some investment ideas. So we had quite an eventful market this week. I have the Nifty futures chart daily in front of you, and we had a gap up, cool off, and a turn on a dime kind of a move in today's trade all throughout, led by the banking and the financial stocks. We have a well confirmed breakout and sustained move above that psychological 15K mark. Last week, I was talking about the fact that it will lead to a pleasant surprise on the upside, because every time we saw the index taking itself for a test of 15K, it had always been a one-way rally led by consecutive daily gains. And of course, that kind of a move needs a cool off. And the size of the cool offs were slowing down, were smaller. And that's why it had enough stamina, enough momentum with which it has given us this breakout. It's a good, confident move from the market. And the participation from the banking and financials came at the right time when it was needed the most. Metals were stretched. They had played its part. IT is being consolidating for quite some time. Pharma, FMCG, consumer durables, all right. But once the metal decides to cool off, correct, consolidate, there has to be certain sectoral participation to come in, and no better than that from the BankNifty, banking and financials. Going forward, of course, that 15,250, 15,350 is the obvious level. We've seen multiple times the index facing resistance there. Keeping in mind the way the market closed today, the length of the bar, the way it has closed, the way it has found fine participation from the index large caps, taking out or at least test of this 15,250, 15,350 zone should not be an issue, should not be a problem for the index. It needs to sustain above that for higher upsides. Is it possible? Highly possible. We should not doubt the underlying trend unless it gives us enough clues that there is sign of a reversal. As of now, nothing like that. The daily charts look strong. The weekly charts have picked up. I'm using the 125-minute chart here. We can clearly see I had this line drawn, which led to the breakout. And going forward, a nice sequence of higher highs, higher lows on the shorter time frames. So we should continue to maintain a positive bias in the market for the coming week, unless something fancy happens on the downside. And so on the downside, the psychological 15K level, of course, is an important one. Today's low for the Nifty future is 14,992, so close to that 15K mark. So I have kept this 14,900, 15,000 zone intact. Unless this is broken on the downside, one should not be too adventurous to look for shorting opportunities. This is a strong market. You can find shorting opportunities for sure, but it's better to short those sectors and stocks which are already weak. So let's take a look at the sectors and stocks. This is the stock charts RRG template. I have reduced it to 1 week just to find out the sectoral gainers this week, and it all came from Bank Nifty, private banks, PSU, yes, real estate, also stocks like Godrej Properties and DLF here, beautiful breakout. CNX Finance, and we have some bit of auto interest there, 5% up this week. Interesting to see is the sectors which were lagging, the sectors which were weakening are the ones which performed this week. We did discuss this briefly in our last Friday's session, that it can be a pleasant surprise from the Bank Nifty, and so it was delivered fairly well. The ones that consolidated are the FMCG and consumption, the ones that we've been talking about. They are in the improving quadrant, so they can show us some strength. Let's see. Let's improve the tail. Let's increase the tail for close to 3 months. Let's fit it out and see who's standing where. Let's sort this in terms of the tail. And we see metals, of course, strong, but we've seen some pretty sharp cut coming in. Next week, we can see a short-term bounce back in stocks like Tata Steel, Steel Authority of India Limited, JSW Steel, because most of the stocks have given a short-term correction and can lead to a very short-term bounce back. So metals and commodity stocks are the ones which are still leading, but they will not probably gain at the rate at which they have gained over the last few months. Small and mid caps continue to outdo the market, though they are losing a little bit of momentum. You can see here, it's sloping down. Private sector enterprises are also doing good. IT. Now, this is one graph which completely turned around from lagging straight away to leading. And so the IT space will be a little interesting. First, let's take a look at the CNX IT index. Now, we had drawn this for quite some time and it's completely stuck in a range. This is the daily chart of CNX IT. It was an erstwhile outperformer. We remember that last year, late last year, it was a big outperformer alongside pharma. Now it has kind of decided to consolidate. If you take a look at the long-term picture, the difference between our two moving averages, we're using the 1334 exponential moving average, kept on widening, and so it needs a little bit of time to slow down. The momentum indicators have cooled off a little bit. The trend is intact, the strength is intact. The important thing is it has started to make some small candles. The short-term volatility has, kind of slowed down. Some kind of a movement, some kind of a breakout, some kind of something is possible, is probable. We need to be a little stock specific here. Coforge is definitely one counter. We've been talking about HCL Tech. It did give us a small move, but now over the last 4 days, it has created kind of a range. Infosys, interesting counter from a short-term downtrend. It's kind of moving up. Mindtree is at supports and is on the verge of a breakout on the upside. So keep a close look at the IT stocks. They're not going to probably create any firewall. They might just give a little bit of support to the market. We can get some short-term movement, if at all. So IT is one. Energy, BPCL, HPCL gave some very nice move. Reliance also played its part today, oil and gas. So BPCL, HPCL was pretty nice. Look to buy into them on dips only. Use the shorter time frames to buy into them at supports. Do not chase these stocks at the current price. Gas Authority of India Limited, please keep a closer look at this stock next week, because it did trend exceptionally well from 130 to 165, and then almost a pretty 50% kind of a correction from its top, 50% off the previous move of the previous rally, that is, not percentage wise. 165 to 145, it's entered the moving average zone. Highs tends to become lows in strong bull markets. So these highs are close to 142. We are at 146. So this stock is likely to bottom out sometime soon and give you a short-term bounce back. IGL, MGL stuck in a range. I was hopeful that IGL will give a breakout this week, but nothing of that sort. And then we have Reliance Industries, completely stuck. There's nothing much we can do about Reliance. ONGC is also another interesting stock, very similar to the behavior we just discussed in GAIL. Uptrend now cooling off to a two-legged fall, if you can see closely. So ONGC and Gas Authority of India Limited will be two interesting stocks to keep a closer look within the oil and gas energy space next week. Auto is in the lagging quadrant, picking up momentum. Finance, BankNifty, all of them are in the lagging, but they have further headroom from here on to improve the underlying momentum. Now, banking is a mixed space per se. Okay, just because BankNifty and financials have done very good does not necessarily mean that all of them have to be bought into. We spoke about ICICI Bank, Axis Bank, and SBI. No doubt SBI is straight away leading from the front. There's no doubt about it. exceptional move in today's trade, close to 5%. Little bit of intraday volatility was on the sharper side. Then we have Bob, the Bank of Baroda, and we have PNB performing pretty okay, but it's always State Bank of India the favorite. There are a few stocks which are fairly weak. Kotak Bank, though, has gained almost 3%, is in a downtrend and should not be looked into. You should not be looking to buy into. Other stocks are far better. We have discussed at length ICICI Bank, Axis Bank, giving a wonderful breakout in today's trade. IDFC First, where is it? Yeah, IDFC First. This is one counter which is completely range bound, like a box kind of a behavior, rectangular. It's on the verge of a breakout. So the space is a little mixed up, but I think it will be more prudent to focus on stocks which are showing strength. That will be much better off. We've been talking about FMCG and consumption for quite some time. Last time we spoke about them, they were in the improving quadrant. They failed us. Now again, they've picked up. They're doing okay. So let's quickly take a look. I'll be keeping a close eye at few stocks next week. ITC. Let's talk about this stock. We all know how important 200 is. Now the stock did give us a good move towards 216. Now cooling off. So this can perform. Hindustan Unilever, disappointing, but look at the wonderful coil that it's created for itself. Very nice indeed. So this kind of a stock, this kind of a pattern does generally lead to a sharp breakout. So this will be an interesting stock. Stocks which rallied exceptionally well and looks a little dizzy. McDowell doesn't make sense to chase. Jubilant Food also gave a nice move. I would like to take a look at Dabur. Now the interesting thing about Dabur is this juncture, because it's a very good portfolio stock, trends really well, but it's in a very interesting juncture where if previous lows turn out to be current highs, then this stock can actually underperform. This stock can actually fall. So it's a make or break level, make or break zone for this counter. Tata Consumer is also kind of slowing down. So I think next week, if FMCG needs to show some strength, then the two large caps, your ITC, Hindustan Unilever, definitely are the ones which can play a role. Bata, a big trend reversal, look to buy on a dip. Havells, breakout on the verge of a trend reversal, though we had a pretty sharp cut today, close to 5%, but still, let's see. Titan, reversal was pretty impressive and it's flat today. Look to buy on a dip here also. So Bata and Titan are the same story. Voltas, very interesting counter. I'll discuss Voltas and then we'll move on to discussing the other investment stocks. We just had a trend reversal 1, 2, 3, 4 days back, and now we had a short-term correction. Take a look at the smaller time frame, like 125 or 75-minute time frame will show you a short-term correction here. Volatility slowing down, momentum easing off. Look for a bounce back in this stock next week, early next week. Highly possible that this stock can give us a short-term move early Monday, Tuesdays. I think we can look at the consumption and FMCG stocks for a little bit of movement. But if the party continues, then I think the banking financials will continue to participate. It needs to shift. The shift should come in to the sectors like we discussed, ONGC, oil and gas. Auto can also play a part. Auto can definitely play a part, like Maruti, M&M, Tata Motors. Let's just quickly talk about Tata Motors and we'll square it. Tata Motors, very interesting, had given a nice breakout, nice one-way move, and then a 2-day correction. It's created a bullish harami pattern, what we call in the candlestick parlance. Well poised for a continuation on the upside. So the shift can happen from the banking to a little bit of auto, pharma, oil and gas sector, which can help the Nifty maintain itself above the 1500 mark. And if it continues to do that, 15,250, 15,350 should not be a problem at all. So please strategically stay bullish. Do not try to short the market just because it has gone up, especially the strong sectors and stocks. All right. So Wrap up here our index stocks. Let's now move and talk about those stocks which looks good from a medium term perspective.